Hey everybody, I am Surbhi and you are watching Key Differences. In this video, I am going to talk about the differences between monetary policy and fiscal policy. So friends, what are we waiting for? Let's get started. What is fiscal policy? Fiscal policy is a key tool that government use to regulate and influence the economy to achieve macroeconomic goals. When the government of a country uses its tax revenue and expenditure policies to influence the overall demand and supply of goods and services in the economy, it is called fiscal policy. A country's fiscal policy is announced by the finance minister through the budget every year. To be more precise, it is a budgetary policy of the government which involves the government controlling its level of spending and taxation within an economy. It is a strategy used by the government to maintain the equilibrium between government receipts through various sources and spending on different projects. So, if the revenue exceeds the expenditure, then this situation is a fiscal surplus. Whereas, if the expenditure is greater than the revenue, it is fiscal deficit. The main objective of fiscal policy is to bring stability, reduce unemployment, and growth of the economy. Talking about the types of fiscal policy. There are two types of fiscal policy. These are neutral fiscal policy and discretionary fiscal policy. The discretionary fiscal policy is further subdivided into expansionary fiscal policy and contractionary fiscal policy. So we will talk about each of them one by one. Neutral fiscal policy. Fiscal policy is said to be neutral when the level of government spending in relation to tax revenues is stable over time. Discretionary fiscal policy. It refers to the government fiscal policy that alters government spending or taxes. Its objective is to expand or shrink the economy as needed. Moving ahead, talking about expansionary fiscal policy. It is the policy in which the government minimizes taxes and increases public spending. Oppositely, contractionary fiscal policy is the policy in which the government increases taxes and reduces public spending. Moving on to monetary policy. Monetary policy is a strategy used by central bank to control and regulate money supply in an economy. The objective is to pursue macroeconomic objectives such as price stability, maximum employment, and stable economic growth. It is also called as credit policy. It is primarily concerned with the management of interest rates and total supply of money in circulation. Further, it is generally carried out by central banks. In other words, monetary policy determines the liquidity and distribution of money in the economy. It involves the use of monetary instruments under the control of the central bank to regulate different measures like interest rates, money supply, and availability of credit to achieve certain objectives of economic policy. Moving on to the types of monetary policy. There are mainly two types of monetary policy, that is expansionary monetary policy and contractionary monetary policy. So what is expansionary monetary policy? It is the policy in which money supply and credit is increased along with the minimization of interest rates to generate economic growth. This is also known as loose monetary policy. Now what is contractionary monetary policy? It is when there is a decrease in money supply and rise in interest rates and therefore discouraging borrowing in the economy. It is also known as tight monetary policy and it is used to prevent inflation. Moving on to the difference between fiscal policy and monetary policy. Meaning, fiscal policy is a tool in which the government uses taxation and public expenditure for the stabilization or growth of the economy. As against, monetary policy is the tool used by the central bank to regulate the money supply in the economy. Next, related to. While fiscal policy is related to the change in government spending and tax rates, monetary policy is related to the change in interest rates and money supply. Next, administration. While fiscal policy is administered by the Ministry of Finance, as against monetary policy is regulated by the central bank, that is Reserve Bank of India. Next, change. The fiscal policy of an economy changes every year. In contrast, the change in monetary policy depends on the economic status of the nation. Hence, it lasts longer. Next, components. The components of fiscal policy are taxes, public debt, deficit financing, and government expenditure. Whereas the components of monetary policy are bank rate, open market operations, cash reserve ratio, statutory liquidity ratio, margin requirements, etc. Next, focus. The focus of fiscal policy is economic growth, whereas The monetary policy focuses on economic stability. Next, impact. Fiscal policy has a direct impact on all sectors of the economy. In contrast, monetary policy has an impact on selective sectors of the economy. Objective. The objective of fiscal policy is to maintain aggregate demand, control inflation, and overcome recession. In contrast, the objective of monetary policy is to maintain price stability, full employment, and economic growth. Next, effect. Fiscal policy causes a deliberate change in the government revenue and expenditure to influence the price level and quantum of national output. Conversely, monetary policy regulates the money supply and cost and availability of credit. So friends, this brings me to the end of this lesson. I hope the concept of monetary policy and fiscal policy is clear to you now. However, if you want to study the topic further in detail, you can visit our official website, that is keydifferences.com. Here you can find a detailed comparison of fiscal policy and monetary policy along with their definitions. Links are also provided in the description box below. So guys, I hope you liked this video, and if you did, please do give it a thumbs up and share it with other people. Also, if you are new to this channel and wanna get more such useful videos, consider subscribing this channel and also hit the notification bell next to the subscribe button so that you are notified every time whenever a new video is uploaded on this channel. And if you have any queries or feedback for me, feel free to leave in the comment section below. Until next time, this is me Surbhi signing off.